Good evening, friends. Welcome to Nifty Indicators. It's easy to make money. As of yesterday, we finished understanding the basics of trading. Today, we are stepping into a little more solid ground. We're trying to understand indicators. We are trying to take up indicators. According to me, the indicator of the indicators, the most important of the indicators is moving averages. The reason being, moving averages is not made with complex calculations or difficult formulas, etc. Moving averages is simple price action. If last 4 days, every day the price has been going up, today 5-day moving average would be higher than the earlier because prices have been going up. Moving average basically are two types. One is simple moving average, another is exponential moving average. Simple moving average is, as the word suggests, simple. That is, if we are talking of 5-day moving average, last 5 days closing, add last 5 days closings and divide by 5, you get 5-day simple moving average. If you want to calculate 50-day moving average, add last 50 days closing and divide the sum by 50, you get the 50-day simple moving average. Simple moving average, one of the most important use is it is used as the middle Bollinger Band. 20-day SMA is used as middle Bollinger Band, and it is very important indicator. That is, when the price is below the 20-day moving average, 20 SMA, market is weak and market has to, the price has to move above the 20 SMA for the market to show the strength, and vice versa. The second type, the exponential moving average, is a little more complex. That is, exponential moving average is the weighted average given on the period under consideration. That is, moving averages are obviously lagging indicators. That is, they are based on the past prices. EMA, that is exponential moving average, calculation has 3 parts. First is calculating the simple moving average, because the simple moving average needs to be given wherever we are starting the calculation of EMA. When we calculate the EMA, the first step is to give the earlier period EMA, and wherever we are starting, as we do not know the earlier EMA, we are going to give the simple moving average to calculate the moving average. Second, we need to calculate the weightage multiplier. That is, we find it out the weightage multiplier by dividing 2 by the sum of number of days plus 1. That is, if you want to calculate 10-day EMA, we divide it 2 by 10 plus 1, 11. If you want to calculate the moving average of EMA of 50-day EMA, then what we do is divide 2 by 50 plus 1, that 51. That is the weightage multiplier. And thirdly, actual calculation of EMA using the formula, that is multiply the remainder of the today's close less previous day's EMA by the multiplier and add this product to the previous day's EMA. Simple. If you have any difficulty understanding it, get back to me. I will explain it to you more detail with example. For example, if we need to find out the 5-day EMA of Nifty, first find out the multiplier, that is 2 divided by 5 plus 1, that is 6. 2 divided by 6 is 0.3333. Now let us close less previous day's EMA multiplied by the multiplier and add this to previous day's EMA gives us today's EMA. As simple as that. If you don't understand, or if you need little more details about this particular thing, get back to me. I shall be only glad to explain you further. Let us try to see the moving averages PPT so that we can try to understand the importance. Why EMA? What does that shows? How does that help us? We will see that. We will see the for example, this chart shows the Excel sheets that I use. Of course, I update the Nifty data and back Nifty data every day for past so many years, and that is what has given me, that is what has taught me so much about making money. Because basically, when we update these charts on a day-to-day basis, these figures on day-to-day basis, we get to know so many things. It tells its own story. For example, this chart, if you see, this is a EMA chart that I update every day. If you see here, this is from 4th of April 2018 to 26th of April 2018. See how beautifully the market is going up from 10,128 to 10,617 from 4th of April to 26th of April. It has gone up by about 500 points, and see how it is pointed out that I am going up in so many different ways. One thing is, if you see here, on 4th April 2018, change in 200 EMA was 0.11. That keeps on increasing, 0.11, 2.07, 2.11, 2.57. It has gone up till 4.46. That itself tells us that market is going up. And you see here how beautifully the moving averages are moving. When the moving averages are moving step by step, for example, here on 4th of April, you see 200 EMA is 10,117, 100 EMA is 10,347, 50-day EMA is 10,354, 40-day EMA is 10,327, 35-day EMA is 10,309. So what actually is happening is it is not a very step-by-step movement here. Whereas you see it on 26th of April. On 26th of April, when you're seeing, you see how beautifully step by step it is climbing up, so that you know that the market is trending. You see 200 EMA is 10,173, 100-day EMA is a little higher than that, 10,390, 50-day EMA is a little higher than that, 10,428, 40-day EMA is a little higher than that, 10,430, 35-day EMA is a little higher, 10,434, 26-day EMA is 10,449, 20-day EMA is higher, till the close is 10,617. Everything is moving step by step. And you might ask, what is the sense in my knowing this at the end of the day, at the end of the period? No, that is not the way to look at it. You see here, for that, you are getting the signal here on 4th of April 2018. If you see 20 minus 50-day EMA, that is the death cross it has made, and it is showing 125.16. 20 minus 50-day EMA is 125. Next day it is 114. Next day it is 105. Next day it is 93. So what it is telling is 20-day EMA minus 50-day EMA, the difference is falling. That is, market is going up. Why? Because the late 20-day EMA is increasing. 50-day EMA is reducing. That is why 20-day EMA minus 50-day EMA is giving us less and less red negative figure. And finally, on 19th of April, it is turning green. And see the difference. From 4th of April till 19th of April, when the 20-day EMA minus 50-day EMA was reducing, but still in red, the fall was not really losing much momentum, or the rise is not really that much faster. But from 19th of April, because from 4th of April to 19th of April, it moved from 10,000 closing, Nifty closing basis 10,128 to 10,565. About 400 odd points it increased in 15 days. Whereas once the golden cross is made, that is, golden cross is when the 20-day moving average goes above 50-day EMA, that is the golden cross. When the 20-day EMA moves above the 50-day EMA and turns into green, that is the golden cross. See, the golden cross is made on 19th of April, when on the closing basis Nifty was at 10,565. Next day it starts moving up 10,564. It was flat there. Next day 10,584. Next day 10,614. After that 10,570 and 10,617. It has started moving up, and it will start moving up much faster later on. So basically what we are saying is the golden cross is made on 19th of April 2019. Sorry, 2018. I'm sorry. 19th of April 2018, Nifty has made a golden cross. So basically what we are seeing here is the golden cross is made. First thing is death cross is losing its steam. Then it is making a golden cross on 19th of April 2018, and then it is a signal for us that market is going to shoot up, and market will start shooting up from there. That is the benefit of using this chart. Let us see the next chart. Next chart is from 28th of June 2018 till August, you see how beautifully the MACD is going up here. It's giving a buy signal here on 6th of July. 6th of July, Nifty is at 10,750, 10,800 level. It gives a buy signal there, and from there it starts moving up and goes up to 11,429 in first week of August. That is the next. You see the Nifty EMA day chart on 9th of October 2020, how it looks. 9th of October 2020, you see last 20 days EMA chart. If you see here, up to 25th of September 2020, everything was red. On 25th of September 2020, Nifty closes above 5-day EMA. Then slowly it starts moving above 10-day EMA, 12-day EMA, 20-day EMA, etc., etc. Because of this, it is Nifty is showing bullishness. EMA chart is showing bullishness that Nifty is going to go up, and you can see how it has started moving up and it has gone up. Here we have got a classic way of reading or using MACD to read Nifty. You see from 19th of October 2021 till June 2022, Nifty has gone up and down so many times, and every time it is guided. We are guided properly by MACD. Whenever the blue line is above the red line, it is a buy signal. Whenever the blue line goes below the red signal, it is a sell signal. You see how beautifully we get the signals, and this is the way to follow indicators. MACD, this is the way we can follow, and you can see here how the various MACDs are giving us the signal that market is going down day by day. There is a sell signal generated, and if we follow that, we can end up making money. So there are many indicators that we can keep using, and MACD is just one of them, but one of the most important indicators this MACD is. MACD helps us make a lot of money. If we follow MACD properly, we can end up making money. If we end up following EMAs properly, we'll end up making a lot of money. MACD is one of them. We'll just check up, we'll touch on them, we'll learn more about them in our next session. Till then, goodbye. Take care. God bless you.